What's up everybody? I have a very cool video today. I'm going to be talking about IHT trending where I alerted right here um, and I said in the chat IHT is trending, and immediately right after the stock broke out and then it went up 40% straight, and I'm going to show you my trade on it, and that's actually what happened. So here it is, it actually broke out and then boom, just went up straight, and it went up 40% from $4 here to all the way to $6. And I'm going to show you, and I'm going to talk about this, how I took this trade, why I took this trade, why it worked so well, and why it was an A plus setup. And I think that this trade should be in your arsenal. So let's get into it. To understand this trade, the main thing, the main reason why this trade, why I even alerted or why I even took this trade, was because of this daily chart. So what happened was, in the morning, it came in my radar when the stock started going up. It came in my radar and my scanner started popping in my scanner. The IHT was already up 100%. It was up from $2 to $4. And as soon as it popped up, I looked at it, I opened the daily chart, and that's what I saw. I saw that it was really clean chart. And what I mean by clean chart is that it was breaking out of this $4, which was this trend, with a very high volume, about like 59 million shares traded right here. Okay. And then it was entering into this territory, which is all-time highs, which means the stock has never traded in here before. And when there's all-time highs, that means there are no sellers. And if there are no sellers, meaning that means that there's high demand and there's low supply. Psychologically, basically what that means is that when the stock is going up and is coming into this no man's land, which means that nobody has ever bought the stock before, that means that anybody who's holding this stock is green and there's no sellers because nobody bought the stock. So how can they sell it? The only people who are going to be selling is that who bought it somewhere around this area, right? Somewhere around this area, about $2. So let's say if you bought the stock at $2 and today you wake up it's at $4, you are happy. You're not freaking out. You're not going to panic sell the stock. You're going to wait and see if it goes up more. And once it starts to come back down, then you're going to take profits, right? So that means that people are waiting for it to come back down. And since it's going up, nobody wants to sell the stock. That being said, if nobody wants to sell the stock is much more likely is going to go higher rather than going lower. Now, keeping that in mind, once I have that in mind, let's look at, obviously you want to you base your trades off the lower time frames, especially a day trade, but you have to look at the daily chart. So now that we have daily chart in perspective, we know that's $4 breaking. So let's look at the 1 minute chart, and this is my trade execution, and this is why I entered here, and I'm going to talk about this. So notice here, that same area that broke out earlier, right here, the $4 area, is the same area as support, $4 break. So the $4 was already drawn on my chart, and then I noticed there's a trend forming. And once it broke the trend, that's where I entered right here. And that's why I alerted this trend, because now one more thing is that the trend lines work the best when it's bouncing off this key support area. So this $4 is a very major support area, right? It bounced here on the daily chart as well, and then it's coming down now, it's breaking the trend. If the stock is breaking above, it's breaking a trend break, but on top of it, it's bouncing off a very key support area, it most likely will work really, really well, because that's where all the buyers step up to buy. And that's what happened. So once I entered here, and that's when I alerted before it even broke out. It did happen really, really quick, and I'm going to talk about that. If you miss it, how you can still capitalize on this trade, I'm going to talk about that. But let's talk about the profit taking area. So once the stock went up, I entered here. My stop loss was this, so very small risk, however bigger reward. So at least 1 to 2 risk reward. So I entered here. Notice here there's a volume increase as well. So the fact that the volume is increasing at the break means more and more people are buying, which is a good sign. So everything is according to favor. So what I do is I take profits where? At the next resistance level. So took profit right here. This was the resistance right here, and that's where I took profit because I knew that's where the stock is mostly going to have some problems. So I took like 70% of my trade position already here because the stock moved up 20% straight, right, from $4 to $5. So it was a nice move. But then still I held some peace and see, hopefully I was hoping for a stock to go do something like this, you know, go up further and break and go up. And then if that would have happened, I would have taken my final profit around somewhere around here. And it actually did happen, but just happened later during the day. And unfortunately what I did was, which was not a good thing, but my rule is that, hey, if I take profit already and if I have small piece ref, I put my stop at break even. That way I am carefree, and no matter what, I'm not going to lose money. I just hate losing money on the you know, when I take profit and the stock comes back down all the way and stops me out, and I hate that. So what I do is I take profits, but once I've taken profits, the stock is up a lot. I don't like it to come back down all the way to my entry price. So I take my final piece right here, and I pretty much, that was the bottom, and the stock went up again 40%. However, the right thing to do, in my opinion, would be to take profit, and then once it comes back down to the same area where it broke out from, right, that creates a demand area, so add back into the position. So this is basically this area is a demand zone. Why is there a demand zone? Because this is the area where initially the stock went and broke out from. So once the stock breaks out, comes back down to the same area where it initially broke out from, because that's where the demand was. So this is a demand zone, and you see how it came down twice and then went up. It came down again one more time here as well. You see this here. And then as soon as it comes back down to the demand zone, the people buy it back, and then the stock pushed up. So I did make a mistake. Could have been like $1,000 trade. In fact, it's just a smaller trade, but still, nevertheless, it was still a good trade. I did follow my rules, and that's what matters. But main idea is to look at the daily chart and then prepare the trade. I hope you guys learned something new in this video, and if you guys liked it, make sure you like and subscribe, and I'll see you guys tomorrow in chat. Take care. Bye.